Welcome back to Investing Talk, everybody. Glad to have you back with us. You know, the energy market, it's always changing, right? But 2025, man, 2025 is shaping up to be a real doozy. We've got some major forces at play
Oh,
here.
absolutely. It's a dynamic landscape.
We're going to be looking at two big stories today and how they kind of, well, they're intertwined, really.
Yeah.
First up, we're going to zero in on Northern Oil and Gas.
NOG, for those following along at home.
NOG, exactly. They're posting some seriously impressive numbers.
Very impressive.
Even while, the overall market's feeling a little shaky, to say the least.
That did volatile for sure.
Then we're going to pull back, look at the bigger picture, see how Trump's return to the White House could really shake things up.
Absolutely. It's a major wild card.
So let's start with NOG. Their third quarter performance back in 24, it was stellar. No other way to put it.
No, it really was.
Earnings per share, $2.96. For every share of NOG stock out there, the company's generating, well, that much profit.
And that blew past analyst expectations.
Blew right past them. Plus, record oil production, over 70,000 barrels a day. Now,
70,913 to be exact, but yeah.
yeah, 70,913. But here's the thing. It's not just the numbers, right? It's how they're getting those numbers.
Exactly. This is where NOG's strategy really stands out. They operate using what's called a non-operator model.
Non-operator. Okay, break that down for us.
So instead of drilling every well themselves, which, that's the traditional model, they strategically acquire assets, think prime oil fields, proven reserves, and then they partner with other companies who handle the day-to-day operations.
So they're like the brains of the operation, but they let someone else do the heavy lifting. Is that kind of...
That's a great way to put it. They're the savvy investors identifying the best opportunities, but they're not bogged down with the overhead, the logistics, the day-to-day grind of running the drilling operations. It allows them to be nimble,
So more like a real estate investor than a traditional oil company.
Exactly. Think of it like this. They find the undervalued property, the hidden gem, bring in expert contractors to do the renovations, maximize the value, but they don't have to deal with, fixing leaky faucets and mowing the lawn.
Smart. Focus on what you're good at.
Right. And this strategy is particularly effective in areas like the Permian and Williston basins where NOG has a strong presence. These are hotbeds of activity, prime locations for oil production, but it's also very competitive.
So they're playing in the big leagues, but they're doing it their own way. Okay, so we see they're being smart, they're focused, but what about the investors? The folks who buy NOG stock, what's in it for them?
Well, and NOG is committed to sharing the wealth, so to speak. They allocate half of their free cash flow to dividends and share buybacks.
Hold on. For those who might not be, fluent in Wall Street jargon, remind us what those are.
Sure. Dividends. Think of those as regular payments a company makes to its shareholders. It's like a thank you for investing in us, have a piece of the pie.
A little bonus, right?
Exactly. And share buybacks, that's when a company repurchases its own stock, which can increase the value of the remaining shares. So both of these actions directly benefit the shareholders.
So NOG's making money, sharing the profits. A&D, they've been increasing those dividend payments, 4 years running?
4 years straight. And their current yield is about 4.1%.
That's nothing to sneeze at, especially these days.
Absolutely. Finding that kind of consistency, that commitment to shareholder returns, it's valuable in any market.
All right, so far so good, right? Company's doing well, got a smart strategy, taking care of their investors. Seems like smooth sailing.
It does paint a rather optimistic picture, doesn't it? But we have to remember, even the most successful companies, they don't exist in a vacuum. They're influenced by the larger forces at play, the winds of change, so to speak.
Ah, yes, the winds of change. And in this case, those winds are blowing straight out of the Oval Office. If 2025, Trump is back, and he's not exactly known for being shy about his pro-oil stance.
Well, that's one way to put it.
So how could this shake things up? What does this mean for the energy market, and more specifically for companies like NOG?
Well, if we look at Trump's past policies and, his rhetoric on the campaign trail, we can expect a big push for deregulation. Opening up more federal lands for drilling, a renewed focus on, what he calls energy dominance.
U.S. energy dominance. We've heard that before.
We have. And it could lead to a significant surge in U.S. oil production, which, on the surface, sounds like good news for oil companies. More production, more profits.
All right. But hold on a sec. Didn't you mention earlier that analysts are predicting Brent crude prices to be around $60 a barrel in 2025? and usually doesn't increased production lead to, lower prices. Help me connect the dots here.
It's a great question, and it highlights the complexity, the interconnectedness of the global energy market. See, increased U.S. production, it doesn't happen in a vacuum. We got to factor in how other major players like OPEC are going to react.
OPEC, the Organization of the Petroleum Exporting Countries.
Right.
That cartel, that kind of controls a big chunk of the world's oil supply.
Right. And they're going to be watching all this very closely. Will they cut production to try and maintain prices? Or will they go head-to-head with the U.S., flood the market, maybe even drive prices down further? That's a huge unknown right now, and it's something that investors need to keep a very close eye on.
A lot of ifs and maybes here.
A lot of uncertainty, for sure.
And then there's Iran, another big player in the oil game. Trump's been pretty critical of them in the past. What's their role in all of this?
Iran is a wild card, no doubt. Under a Trump administration, it's very likely we'll see stricter sanctions reimposed, which could significantly impact their oil exports. We're talking potentially a reduction of over 1 million barrels a day.
1 million barrels a day.
Yeah.
That's a big chunk of change.
It is, and it could offset any increase in U.S. production, at least to some extent. But it also introduces, a whole new level of geopolitical tension. And that always adds complexity, adds risk to the market.
So we've got domestic policy, international relations, market forces, all these things kind of swirling around, colliding. Who knows what'll happen?
It's a dynamic situation, to say the least, and it's why staying informed is so crucial for investors.
All right, well, we've laid out the landscape, set the stage. We've got this company, NOG, doing great things, but we've also got these huge forces swirling around them.
The micro and the macro.
Exactly. Before we jump into how all this might affect your investment strategy, what you should be looking for, what you should be doing, let's take a quick break. When we come back, we'll dig deeper into those potential risks and opportunities. Stay tuned.
It's kind of wild, right? We could see this surge in U.S. oil production. Trump's pushing for it. But at the same time, we're hearing about peak oil demand, like it's just around the corner.
Yeah, it's almost like two trains headed for a head-on collision. How are investors supposed to make sense of all this? I mean, is it as simple as just picking a side? Oil or renewables?
No, not at all. It's way more nuanced than that. It's about really understanding the nuances, the different forces at play. That's why I find northern oil and gas so interesting.
NOG.
Yeah, NOG. Remember, they're not just drilling like crazy. They're being strategic. Acquiring assets, partnering with those other operators, it gives them flexibility, a lot of flexibility.
So they're not putting all their eggs in one basket. They're hedging their bets, adapting, right? Whether it's an oil boom or demand drops off as we transition, to cleaner energy.
Exactly. It's like they're playing chess while everyone else is playing checkers.
Love that analogy.
And don't forget their commitment to shareholders, those dividends, the buybacks. It shows they're focused on creating value no matter what the market does.
Makes sense. But for those investors who are, maybe feeling a little overwhelmed right now, what's the key takeaway? What should they be focusing on as they, try to navigate this whole energy mess?
Honestly, stay informed. That's number one. Don't just react, knee-jerk reactions to headlines or prices jumping up and down. Do your homework. Really dig into the companies you're considering. Look at their strategies. Look at their financials. How are they positioned for the future?
Look beyond the surface.
Yeah. And don't forget the geopolitics. It's not just about barrels of oil. It's about global power, environmental concerns, technology. It's all connected.
It is. It's the big picture. And that's what we're trying to do here on Investing Talk, help you connect those dots so you can make, smarter decisions.
Exactly. Knowledge is power, especially in a market like this one.
So true. Okay, let's shift gears for a minute. We've talked big picture, but let's bring it down to the individual investor. What does all this mean for their portfolio? What should they be doing?
First thing, don't panic. We're not saying dump all your renewable energy stocks just because Trump might, roll back some regulations. And we're not saying go all in on oil just because there might be a production boom.
It's all about balance, diversification.
Exactly. But beyond that, be selective. Do your due diligence. Find companies that are prepared for this new landscape, like Northern Oil and Gas. Their non-operator model, their focus on shareholder returns. That's one example, but there are others.
And keep an eye on those wild cards we talked about. OPEC. How are they responding? What's happening in Iran? Those sanctions could have a huge impact.
That's where things get really interesting. It's not just, financial statements and earnings reports. It's international relations, potential conflicts, the whole future of the global energy
It's
market.
just a lot, but it's exciting, right?
It is.
So for our listeners, those ready to really dive in, what are some key takeaways, some things they can use to make those investment decisions?
Okay, first off, understand there's a lot of uncertainty out there. No one knows for sure what's going to happen. But that doesn't mean you should just sit back and do nothing. Use this time, educate yourself, research those companies, build a strategy that fits your risk tolerance, your long-term goals.
Be prepared, not panicked.
Mm-hmm.
Got it. What else?
Remember, energy is not just one thing. There are different sectors, different technologies, different ways to play this game. Don't limit yourself. Explore those options. Find what works for you.
Diversification. Good point. And last but not least,
Stay informed. Read, listen, learn. The more you know, the better equipped you'll be to handle whatever comes next.
words to live by. Well, folks, we've covered a lot of ground today, from NOG's their amazing performance to Trump's return, the whole global energy picture. It's a lot to take in, but hopefully you're walking away with some new knowledge, some new insights.
And hopefully a little more curious about this fascinating market.
Couldn't agree more. And on that note, that's a wrap for today's investing talk. Big thanks to our expert for sharing their expertise, their insights.
Always happy to be here.
And to all our listeners, thank you for tuning in. Don't forget to subscribe, share the show, leave a comment, let us know what you think. And until next time, happy investing.